Hey everybody, welcome to this free edition of our Trader User Group Weekly Roundup for the trading week ending November 22nd, 2024. I'm Preston Brett. Thanks for tuning in. Well, the financial world is bananas. I don't know if you guys heard, but last week some crypto billionaire, what else, bought a 10-foot by 10-foot canvas with a banana in the middle of it, taped with duct tape. Paid 6.2 million for it. It's insane. That is how I know the markets are really starting to get really stretched here. Okay, and let me just talk a little bit more about that in just 1 second. Let's come over and just take a look at this past week here. You can see everybody was in the green for the week. The Russell had the strongest week. Year to date, everybody's solid double digits in the green. Um, we kind of recovered from the previous week's losses. I mean, gains for the week though of more significance. It was more broad based. All right, small cap indexes outperformed large cap, and the equal weight actually outpaced the cap weighted S&P. And then of course Bitcoin continued its post-election rally, notched its third consecutive week with gains exceeding 10%. And just understand the S&P, you can see the PE ratio. Now this is Wall Street Journal's PE ratio calculation. FactSet is about a point below them, but either way, it's still fairly high. The PE ratio is about 31% over its average from 2015 to 2020. And back then, the interest rates were in the 2 to 3% range. So right now, it's about 4.4%. So high valuations, higher interest rates. That does tell me the markets are getting a little bit tired, and the financial world full of liquidity is a little bit bananas. I mean, another perfect example besides the banana and the duct tape for 6.2 million. And by the way, that Bitcoin billionaire said he's thinking about he would like to tape the banana to a starship that Elon Musk is shooting into space and let it be the first banana in space, I guess. Oh my goodness. But another perfect example is MicroStrategy. Brilliant move by MicroStrategy. They issued 3 billion in 5-year convertible notes, paying 0% interest, but they're convertible into its stock at $672 a share. That's 55% over the current price. So they essentially got $3 billion at 0% interest, right? And then assuming their stock goes up that high, what they're going to do is convert all that money and buy more Bitcoin. That's why MicroStrategy is doing so well right now. But again, ample liquidity in the markets. Be very careful when you see crazy stuff like this that financially people, no one in their right mind would really want to do, but money is chasing right now, and that's kind of what we're seeing. Okay. I mean, the focus of the week this past week was NVIDIA's Q3 earnings. Really little change. Most investors were okay with the results, although the company guidance for the fourth quarter was a little bit lighter than analysts expected. NVIDIA ended the week slightly down, but that's what moved all the other stocks, all the equal weight stocks and the equal weight index over the cap weighted index. Okay, you can see here the dividend yield in the S&P is at 1.24, 10-year Treasury 4.41. Folks, when you get a disparity that wide, generally you're going to see more and more money running into the Treasury. All right, and look at the earnings yield. The earnings yield for the S&P is 4.42, and the S&P earnings yield over the 10-year Treasury is only 1 basis point. That's 1/100%. So again, big money is going to look at this and go, wait a minute, I can go into 10-year Treasury with, in theory, no risk at all, versus the S&P earnings yield at 4.42. So that's going to chase some money out of the equity markets, I believe. And as I've told my members, I do not think we're going to have another year like we've had in 23 and 24 in the S&P, where it's been over 20% for the year. All right, we're going to have a little bit of weakness, a little bit of market rest, a little bit of consolidation, maybe even a little bit more of a pullback. All right, I mean, we're going to see that as well in the market. So that's a little bit about what I'm seeing here uh, um, this past week in the market. You can see the best performer for the week was materials, a little over 3% for the week. The worst was healthcare at 1.64, still in the green. And year to date, all sectors are in the green, but leading the way is financials, loving the way the interest rates and the yield curves move back above zero. on the front end of the curve with the Feds cutting rates. That reduces the rate on the front end, so the banks borrow at the front end. They lend on the long end, which is where the rates are going higher. So that, really only helps what they're doing. Okay. So all in all, the banks love that kind of stuff. But the other thing this past week, a lot of the focus remains on the Fed's final meeting of the year in December. I think December 18th or somewhere around there. Investors, basically looking for what's the pace of interest rates going forward. There's still a higher than 50-50 chance the Fed's going to cut rates in December, but everybody wants to know what's going to go on in 2025. The markets have already discounted another 50 basis points in potential rate cuts. So I don't see how. I think the Feds are not going to cut as much as what people are thinking. All right. So we're going to just kind of see how that stuff plays itself out. Now, of course, if we go across the pond and go take a look at Europe, they're not doing nearly as good as the U.S. You can see kind of a mixed bag. The Euro stock's down 10 basis points. Same with CAC 40 down. And then the FTSE and the DAX were both up. Business activity in the Euro area contracted again. It was a little bit more of an unexpected contraction in November, kind of outlining some of the uncertain economic outlook for the Eurozone, right? I mean, the composite PMI fell to 48.1. That's a 10-month low all across Eurozone. And remember, anything below 50 is contraction, all right? So the manufacturing sector is sinking deeper into recession-type territory. And the services sector is starting to struggle after 2 months of just minor growth. So we're starting to see some weakness there all across the Eurozone. A lot of it's driven by weakness in China, which they're big. Europe does a lot of exports over to China. They're not buying as much as they normally do, but we're getting a lot of that. Now, over in the UK, weaker PMI data kind of bolstered the expectations that the ECB could ease monetary policy further in December. But we'll see. And then, I'm sorry, in the BK, Bank of England, they're pretty much going to keep the rate steady this year. They've already cut 3 times in this year, and they're estimated of cutting 2 more in 2025. So we'll see how that plays out. And then, of course, if you look at the Asian markets, Nikkei, China, and Hang Seng all in the red for the week. Bank of Japan, well, that's going to be really interesting there. Since August the 5th, when we had that unwinding of the trade there, we've got interest rates. They're kind of, the Bank of Japan's kind of balanced between December and January on whether they're going to raise the rates. They're very conservative. I don't see them doing that. But the 10-year Japanese government bond is already approaching 1.1%. It's almost like at a 13-year high. And Japan is starting to have inflation that's sticking higher than 2%. Right now, their CPI is coming in around 2.3%, in line with expectations, but it's going to force them sooner or later to hike the rates again, but we'll see. Then, of course, in China, both the Hong Kong index, Hang Seng, and China were both in the red for the week. China, really a light economic calendar over there, but there are a lot of worries about, with Trump coming in and tacking a lot of tariffs on them. And China unveiled a lot more stimulus measures from September to October, November, trying to boost their housing sector and kind of revive consumer demand, consumer spending. But the officials there have said they can even ease further as necessary, primarily in cutting their reserve ratio requirement for domestic banks. So China is still hurting. And when China hurts, Europe feels it a lot much more than we do. So that's kind of what's driving the macro market right now. What I want to do is shift the screen over. Let's just take a look at some key markets, charts, daily charts of some key markets, just so I can give you guys some of my input here. Let's start over with the E-mini S&P 500 futures first. And you're going to see we're still near all-time highs. It's going to take a couple of seconds to come up on your screen, but we're still near all-time highs that were made on November the 11th. Right? It was intraday up about 25.77%. You can see my resistance bar our support bar. In this case, it was a resistance bar. We moved up, we moved down, and the bar tends to attract attention. You can see right here, we moved up, we couldn't get over it. We moved up above it, and then we came back down below, and then we moved through it. And this was the next one in line. And these bars use a combination of Gann, Fibonacci, and a time series to kind of plot when you're in powder, meaning you've never been up this high before. Where's the most likely resistance point where buyer or sellers are going to start to sell? And this is kind of where we're sitting now. I do believe the month of December, be very careful. Normally, December is a strong, statistically speaking, up month, but I do see some more downside risk in December than I normally see. Right. And even though the markets finished this week up, I'm very leery of just kind of how December is going to play itself out, meaning we could have a week or two of down action before a little bit of a reversal back up. So I don't see us going gangbusters to the upside in December. All right, the risk is more skewed to the downside right now. Okay. Now, of course, if we come in here and look at the Russell was the biggest performer for the week. I mean, they were up. Little over 4.5, almost 4.5%. You could see the Russell here still has not made new all-time highs, right? You could see if I stretched it out. On November the 11th, they came up to intraday up 20.08%, but the all-time high was made way back on November the 8th, 2021. So almost to the exact same day, just a few days later, almost making new highs. I thought the markets would have carried us up there, but it didn't. Couldn't quite get up there. And you could see where we've got this almost like a cup and handle kind of pattern shaping up, but it's setting up also to be a divergence kind of trade where we may move up here, but then going into December, we're going to pull back and possibly test the 50 EMA again. All right. Now let's look at Bitcoin. Bitcoin's been on fire. All right. Just really on fire. And you could see right here on the 22nd, it made all-time highs, up over 135% for the year. It was intraday, it was up 100,170. And it closed the week like a little over 99,000, close to the 100,000, but never really there yet. But usually when the markets get that close to a really key number, the markets take that number out. So what I would anticipate that number being taken out. And then we're going to see a nice little pullback the minutes start to shake things off, and then it'll make another run again. I think eventually Bitcoin's probably going to be in the $1.30 to $1.50 area by the end of 2025, unless we have a big recession. Okay. And then, of course, if we look at the Dow, you can see the Dow is also near all-time highs. But again, if it does get up there, it's looking like we could have a bearish divergence, which would signal a weaker start to December. Right. Now, this is going to be a big holiday week for American markets. For those of you that are European or Asian based, this Thursday is our Thanksgiving holiday, so the markets are closed all day Thursday. Friday, we call it Black Friday, although most people, almost half the people are buying online now. But it's Black Friday, meaning the markets will be open until 1 p.m. Eastern Standard Time. And then they're closing, all right? Which means most of the markets are going to slow down and pretty much just go on vacation Wednesday afternoon and be gone through Monday. All right, are coming back on Monday. Some of the lowest volume trading days of the year are coming up towards the end of this week for the U.S. market. So just understand that. The markets tend to sleep, but if any major event happens, because there's less liquidity in the markets, the move tends to be oversized. So just keep that in mind, okay? If we come down and look at the equal weight, you can see the equal weight outperformed, actually moved up, almost made new highs for the year. Right? And then if we look at the ratio of the equal weight over the SPX, look at this breakout here, guys. This was a regression line that started back in September, and it finally broke out of that regression line. That tells me that more money is coming out of or profit taking in the Mag 7 and going into more equal weight, cyclical financials type of investment, right? So we're starting to see that, and that's when stock pickers tend to do much better. And I think 2025 is going to be a stock pickers market as opposed to just buy the Mag 7 and hang on, okay? And then, of course, we come down here and look at NASDAQ. You're going to see here in NASDAQ, not quite as high as the other indexes, so, and that would be the result of the Mag 7. But you can see how it's moving, and how we're just holding the 50 EMA. So I think this may break going into December. We're going to have a little bit of a downside in December. I don't know right now how big the break is going to be to the downside, but I do see the first part of December being probably the risk of a move lower is greater than the risk of a move higher. Okay. And then, of course, if we look at the ETF that tracks Mag 7 only, you can see it's kind of pulled back a little bit here as well. So that's kind of what I'm seeing. And then, of course, if we come down here and look at treasuries, if we look at the bond market is also in this regression channel straight down, which means interest rates are going straight up. All right, this is the 30-year bond. And then, of course, if we look at the 10-year treasury note, you can see here same thing, right? I mean, we're kind of holding steady. That tells me it's going to start to consolidate down here. And if we look at the 10-year interest rate, here's the 10-year interest rate. Well, it's just been really since September, it's been moving straight up, and it finished out the week at 4.41%, okay, for the 10-year. So all in all, moving higher for the interest rates. And that is what's kind of somewhat putting a damper on the mortgage market, because the mortgage market is based more on the 10-year than the 30-year bond. And then, of course, if we look at the dollar, check the dollar out, guys. The dollar made new 2024 highs on Friday, intraday, up 6.37%, a dollar 108.07. Okay, that's a big move, but let's compare it to the euro. The euro now is new lows, right? It actually hit an intraday low of 103 to the dollar, right? A lot of analysts believe the euro is going to continue to weaken because Europe is weakening. The 50 EMA crossed the 200. Remember my bar, this was my target. It hit it a little bit sooner. My target was right around 105, and sure enough, we came all the way down here, which means we're probably going to bounce around here. There is no divergence in this move. That suggests there is a lot of a lot of sellers pushing this market lower, okay? And then, of course, if we come around here and look at gold, gold has had a pretty good little week. You could see gold kind of bottom down here, came back up, recaptured the 50 EMA. So I think gold's going to run up a little bit. Okay. Same thing with silver. Silver's got a little bit of a higher beta, so percentage wise. But notice silver here is lagging gold again. It's not over the 50 EMA. It's holding it up right here. So we got to watch this really closely. Remember, back over in the summer months, I said, let's take a pair trade. Let's go long silver and short gold because they normally run together. One normally runs a little bit faster than the other, but they eventually catch back up. And it was a great trade because silver took off and gold ran sideways. So it was a really good home run trade for our members. But right now, silver is kind of holding just south of the 50 EMA. All right. So we got to watch this really closely. And then finally, in the energy markets, if we look at oil, oil's back up over 70 again, but it barely moved back over the 50 EMA. And it's a lot of chop. I mean, just a ton of chop. We hit my initial target down here, and we'll take a look and see. I have a target right here, much lower, going out into the end of this year, into January. So let's see how this plays itself out. Okay, now if Trump starts pumping a lot more oil, he wants to get the price of oil down. So this would make sense with the oil markets, right? Which tells me that the odds favor and the risk of a bigger move is a downside move, right? In the oil markets. And then, of course, if we look at nat gas, I couldn't believe this when I saw it, but nat gas actually made new 2024 highs here, okay? Up 4.27%. And I was expecting nat gas to come back down again. Now that nat gas took out this high back over here, right? That high right there. And notice it was an intraday and then it closed below. That's a bearish candle. To me, picking up puts in UNG is, I think, a really good trade. I think it's going to come back down at least to the 50, maybe the 200, and move a little bit lower. Members, we'll go a little bit more detail on that in our Sunday night session. All right, everybody, that's pretty much a quick and dirty on the major indexes. Members, I'll see you this Sunday evening at 7 p.m. We'll go through a couple of new additions I got that look pretty good. And everybody else, enjoy the long weekend. Take care, folks. Ciao now.